In this video, we will be using the knowledge from the forecasting revenue and expenses video to construct a forecast panel to eventually get Ebit, and then we are going to get an income statement out of the forecast panel. So we're given ABC Company and their financials for the year. This is their year 2022, which is this year right here. And we can essentially just pull this straight from the income statement for that year. So we'll do that real quick. And you can follow along. The link to this spreadsheet is in the module, and you can follow along as I go along. So to calculate Ebit, we are just going to take revenue minus all the expenses for that period. And this will equal. So you can see that it's revenues minus all these expenses equals your Ebit. So we're given a corporate tax rate of 26%. This is average. This is what it is with the flat tax rate in this year. This can change. And then we have the market increase. So this is our forecasted revenue. So this is based on a whole bunch of assumptions. So that we project that the market will increase. And these are given, by the way. We expect a quality premium of 2%, a new product introduction, and a geographic expansion. So this is going to be a function of, so we are going to use this to expand revenue. So this is essentially just going to be the year 22's revenue times 1 plus this revenue. And then we will go ahead and make the E11 constant. And then we will drag this down. So the forecast ratio for this would essentially just be the 31%. And then this will be, so the forecast ratio for the product and services area is going to be essentially the first year divided by the first year's revenue. And we're going to hold this revenues constant so we can just drag it across. And we don't do this for Ebit because Ebit is calculated for us. Well, right now it is, but we can calculate Ebit. So we're going to go ahead and not do that. And then we're going to use our forecast ratio to get the number for this year. We're going to use the forecast ratio times the revenue to get the forecasted product and service based on the revenue growth. So we're going to go ahead and hold E constant. And we'll go ahead and use that. And then we can drag this across. Make sure this is doing what you want it to do. And you can actually bring this down and this will be calculated for you. And then we can do this exact same thing. So essentially what is happening here is we are taking the revenue times the growth, the forecast ratio, and we're getting a value based on the revenue growth. So we can do this exact same thing for all of these. And now you can just drag them all across. Now that you have all your Ebits and all your information, you can go ahead and you can go to this new tab and you can start filling it in. So I've already gone ahead and put your year 1 or 2022 in there, but we can go ahead and copy and paste all this information and you'll have a forecasted income statement for the years, for 5 years. So we can see that revenue is growing year over year, 31%. And this same rate of growth is happening through the entire company, throughout the entire company. So we have an equipment purchases of 136,900, and then the year following it goes up. And we can do this for all the years. And we can do this for products and services. Oh geez, we mixed it up. So this is supposed to be right here, but we can still keep on going. So equipment purchases, so we have first year, now we have second year, and then we're gonna have our third year. And our fourth year. Oops. You gotta be very careful when you're transposing all this information. So now we can get a total cost of goods. So this is just going to be a summation. So this is what's going on here as well. And we can drag that across. And now we have our total cost of goods sold for every year for the next 5 years. So now we can get a gross profit, which is essentially just our revenues minus our cost of goods sold. And we can see that that's the case here as well for the first year. And we can drag that across. Now we have a gross profit for 5 years. Now we can bring over marketing and sales for year 2. And we can do the same thing we did above down here. And then we can do this for admin. And once you do this once, this will work for years to come. So let's say that year 2023 happens, we can then forecast another year out after it. So let's say that year 2023 happens, we can go ahead and use the actuals here and forecast another year once this year 23 is up. And now we're going to take depreciation. So we can continuously use this model to get forecasted income sheets. We can use this for other purposes as well later on if you decide to progress through finance. This model will also be used, one similar will be used for valuation. So now that we have all of our operating expenses, we can go ahead and sum all these down. So essentially all we're doing is just summing down to get total operating or Ebit. So now that we have all of our operating, we can calculate Ebit actually. So this is just going to be our gross profit minus our total operating expenses, like in the first year we have here. and we can drag this across. Now we could use this one right here, but essentially all that's happening here is we're getting a taxes paid. So this is based on 26% from the other sheet. So our corporate tax rate is 26%. So we can take Ebit times 26% and we'll get 14 million for taxes. And we can do this all the way across. And then net income is also just going to be your Ebit minus your taxes for this small example. Later on, you may learn that there's a lot more that goes on involved with getting to net income. But for simplicity, for this course, this is where we'll end. And that is how you construct a income statement from forecasted revenue.
My name is Rick Haskell, and I'd like to thank you for watching this video as part of the Bill and Vieve Gore School of Business's Business Certificate Series. I'm a finance professor in the business school, where I'm also the director for the college's Center for Financial Wellness. The Business Certificate Series is offered through the Center as part of our outreach through the Gore School of Business. You can follow us on social media through Westminster's Instagram, YouTube, LinkedIn, or Facebook pages. You can use the QR codes provided or simply go to these websites. Thank you.